All right, 'tis the season, everybody. Should you be buying retail stocks? We're going to have Jim Frischling back. He's got a couple of picks for us. We'll be right back. But he did say he wants answers. Big question here, will we find the money, the $1.2 billion? Jim Frischling is standing by with me. Again, as we're looking at these live pictures, Jim, that really is the question, is where this money is. And investors are still out in the cold.
I think that's right. And to a certain extent, I almost feel some of these hearings might be a little premature. I think the #1 goal right now is to find the money, and all efforts should be on really the forensic analysis needs to get done of finding it. The fact that it's an unanswered question, I think, is a bigger problem. And while I know that today will make for great sound bites, and I'd be the first one to admit I want to hear what he has to say as well, I'm still more concerned that this is still such an unknown. So maybe it's a little premature, but hey, it's going to make for a great show.
Right. Well, it will be. And as you said, you want to watch it. We're going to be watching. You're going to be watching that testimony live right here on Fox Business. Back to the markets just for a moment. We're looking at shares of Costco for you right now. The warehouse retailer, first quarter earnings missed expectations, actually. The stock is down to $1.43 right now, 86.04. There's the one-year chart for you. High gas prices, membership fees, currency exchange rates contributing to poor results at Costco. COST is that ticker. Speaking of Costco, Jim, this is one of your picks today, is Costco. But what'd you make of this report? It was There's some big landmines in this
and there were, and despite revenues being up almost 13%, the fact is it did disappoint. What I like about it is that memberships have actually increased, members have increased, and fees off of members have also increased by 7.5%. And I think on November 1st or on or about, they were able to increase their membership fees by 10%. And unlike other companies that have tried to increase membership fees and have failed, or rather have been tattooed for it, the fact is I think Costco will be able to keep its members and still be able to increase the fees. So I actually think it's an encouraging sign to me.
Okay. Well, so you're saying basically with the stock down today, you still think it's a buying opportunity?
I do. And
you're doing some bargain hunting, I've noticed today.
I am. And I was pleasantly surprised by Black Friday for the retailers. I may not love the way they went about creating the frenzy to get people in the door, but the results, and we won't find the exact numbers for a little while, but at least the initial indications were that they were big time, that consumers came out and spent. And with that, I have been looking at the brick and mortar retailers.
You also like, and there's Macy's and the group as well, but you also like Home Depot, which you're kind of along that theme. Costco, Home Depot, these are the large, big retailer names. Is that a price point choice for you, or what?
It's a relative value. I think it's a retailer on steroids with its building improvements, it's do-it-yourself, it's we-do-it-for-you services, and even though the stock is up, I think about 15% for the year, I think its PE looks like it's in line with the average retailer, and I think it shouldn't be in line. I think that's an outperformer. So again, I recognize it's had a good run, but I think they continue to maintain good cash flows. Their balance sheet is attractive, and they have a history of having a good performance with respect to I guess price to earnings. So I think it should be. I am looking at it.
Do you pick Home Depot over Lowe's then?
I'll go with yes, but I will tell you that I've not spent as much time on Lowe's as I recently spent on Home Depot. But I do like the sector, so I'll certainly say that you can choose your favorite of the big large cap retailers like that.
Before I let you go, just overall market comment as we see another negative day on Europe. How are you feeling just overall about the markets before we move on?
No, I think I understand why people are getting disappointed, or they want it solved very quickly. But you can't have this type of I guess correction without the kind of the pain that we're going through. So I'm trying to be as rational as I can. I think these things take time, particularly Europe. So it's slow growth. It's deleveraging. Again, I'm encouraged by the fact that I think the EU knows, the ECB knows that they have to do something, because the alternative is truly a disaster. And again, I talked about some trades, and if the EU doesn't get it together, I have to reevaluate all that. But I do think it's a challenging market. It's not for the weak stomach.
Well, it's been a roller coaster, more volatility, Jim. Jim Frischling, thank you very much. We will be watching, all of us, the testimony by John Corzine. All right.